alert on your screens. So when we see a cat stock, obviously there's some news comes out, the stock opens, gap up, obviously there's the cash close, the stock opens, gap up here. Now, because it's opening gap up, nobody's got any options up here. There's nothing up here, perhaps, and everything is kind of back down here. So there might be some slippy levels. Maybe this price here, for example, might be a very, very slippy level beyond that. And what that does for people is, obviously, there's been a news release. And a lot of the times, obviously, the vast majority of cats, if only you could short sell cat stocks, you'd make a fortune almost every single day, guys. Now that might sound a little bit weird because obviously we're buyers of cats, but we're buyers of very specific cats. We are predominantly buyers of cats that buy at the open following an initial sell, because it's nearly always going to be an initial sell. So if you could short sell cats at the open, you would make a fortune every day. Literally, you'd make a fortune, but most cats don't allow, because they're usually quite small stocks, you'll really, really struggle to go short selling cat stocks. So obviously what happens with most cats is that people who sell their profit break, the price of the cat usually drifts off. We obviously have some amazing outperformers. And maybe even a day, 2 days, 3 days later, we end up down at the very, very slippy levels. And a lot of times what happens is we'll get that type of reaction there. And that's not a buy trade because we don't know what's going to happen next. But when if the price comes back out of that nosedive and it starts coming back into this location, this actually is a reasonable good trade to add to your portfolio because you've now got the upside potential that you already know about, but you've also got a big discount against a price that felt that this was worthwhile in the first place. Whether they agreed that this was overpriced or not, this is definitely underpriced, otherwise there wouldn't have been a cat in the first place taking off. So we've now got a stock that tells us a lot of information. The price seems to be underpriced. Knowing where these cats are, knowing where these strike levels are, of course, can help us because they could be randomly jotted about the market, couldn't they? They could be at the halfback trade. They could be below the current price. Obviously they're going to usually be below the current price, but they could be back at the current cash, at the previous cash close, couldn't they? They could have been way, way, way off the levels that we're talking about. So when we've seen some of those cat ideas, and I did retweet some of them so you could see what happened to some of them, so it gives you a fair understanding of what a cat can do, you can start to see that there are genuine opportunities to maybe take advantage of cats type trades. But obviously it does take time. You'd have to set up alerts for these levels. Coming into these levels, you start looking. Here's a good example of a cat stock here. We can already recognize that the cat was the move in the background here you can see this is on the 20th of August. You can see this is this break to the left-hand side on earnings. The cat stock opens gap up and it has a very strong buy-side response. So that's good news. So this is the kind of cat stock that I really, really quite like. Now the interesting thing is that it's got a slippy downside. It's got a slippy downside, and we've given you some slippy levels, like the 20 price level is slippy, the 18 price level will be slippy, the 10s will be slippy. So we start looking at the 20s, we start looking at the 18s, and we start looking at the 10s. And obviously we alert these areas. Now we don't alert the price, we're alerting the area, so we're trying to alert it before it comes into that price in case it doesn't get there. On this occasion, this one didn't quite get to the 18s, but obviously it sold off aggressively off the slippy 20s here. Now obviously the closer it gets to that strike level 18s, the better. Then you can see what happens. The market opens gap up the next day, and it drives through the 20, which is now going to have a lot of hedgers unwinding that position and buying this stock, and we get this lift from 20s up to 22s for a big 10% gain. It's a pretty good trade, isn't it? Pretty good trade. So what we're always asking is you know, these cats are these levels nearly always will not print during the course of your day session, because obviously they're usually quite, as I said, quite a distance away. So what you've got to do is you've got to start looking slightly further out, haven't you? You've got to start looking further out for these trade ideas. So for example, we can look at some of the cats today. Now we don't have any slippy levels for LWAC, and obviously there's a story behind this, and you can see that this is actually a very good cat example because the price sold at the open and bought back into the $22.14. So I buy it almost straight away. This is our number one cat pick, LWAC. So we bought some $22 stock here. Well, guess what, guys? That $22 stock's just traded $29. We just made $7 on a $22 stock. 30% return on our money onto that new high print right there. 30% return on our money. It's crazy, right? Absolutely crazy. LWAC. The second cat, now you might not do any more cats because that's obviously it finished. The number one cat gave you a buy trade, so there's not going to be any reason for you to sorry, wrong ticker. There's not going to be any reason to buy any other ones, but you can see that this one also gave you a gap. It also gave you a gap up, and it also gave you a buy trade at the open if you wanted to take one and two. And obviously the gap at the open obviously gave you a buy trade at 33.5. It traded 39s. It was about a $6 profit on a $30 stock. You can see it obviously gapped you through the level here, which obviously caught a lot of people by surprise. We don't have a Slippy on this. If you don't have a Slippy on it, guys, the one price you should always look for is the next wholesale. The next wholesale in this is going to be $30. The next wholesale is going to be $25. So you're going to be looking around those areas for possible buy trades. If you get a buy trade at the open, you start looking at these areas. So you may have actually have bought this stock here at 30. If you did, $30 to $36 is a 20% return on your money on that little trade. Ticker symbol SPRT did give you a couple of slippy levels. You can see that SPRT also gave you a cat at the open here at $13.39, but we do have a slippy level at 12. So this is one of those ones that you'd alert to the future, right? You'd have put alert on this price at $12. Because between 12 and 10, the market gets slippy. So obviously it would be lovely to see this market selling off down into those areas in the next 2 or 3 days, and look for opportunities to buy back into that price area. This would be one of those stocks that you would put an alert on to try and watch it maybe from $12.20 or something like that. You'd start putting an alert into this area for the possibility that this could become a stock pick going forwards. DKS, sporting goods, similar. We've got some very slippy levels on this one. But the very, very, very slippy levels are way down through the opening, the close from yesterday. Very, very slippy, way down through the close. So the chances of us getting that level are almost zero. But it is slippy from 117s. Now you might be saying it's never going to get to that price. But this is a cat, remember. It might get back to that price, in which case it's worthwhile putting an alert on this 118 level to try and watch this for possibly a buy trade back into the stock, because you now know that the price is willing to trade the 130s. So if I can buy this stock for $116, I want to buy that stock for $116, right? It would make sense to buy it, but only if somebody else buys it, only if there's some insiders think that this is now a good stock. And again, it's gapped up on earnings. So obviously if I can get that discount into that price area on earnings, I should take advantage of it. Make sense? Great.